Good morning, good afternoon, good evening from wherever you are in the world. This is the first installment of the video that is brought to you by FSI Capital. In this video, we're going to revolutionize the way you trade by revealing a strategy that you can start using today. So I want to thank you for taking the time, and I hope that everything will benefit you in your trading. In this video, we're going to talk about a profit making strategy that will make you money on a consistent basis. But you must be able to follow the rules very carefully if you want to get the desired results. It's very important that you follow the rules so that you get the results. You're going to see how to adopt a winning strategy with money management to grow your account exponentially. And you're going to see proof that you can never lose money trading. So a brief history of Forex. So currencies emerged as an epiphany that it's easier and safer to exchange goods with one another rather than to fight for them. So currency was that epiphany. Currency emerged as a way of elevating from barter trading because the barter trading system had its flaws, but the currency system had its own benefits in the sense that currency is divisible and it's fungible, which means that it has equal value in all of the countries. So the forex trading business started in 1971 when Richard Nixon stopped the convertibility of money to gold. So this is when our business actually emerged in 1971 after the Bretton Woods Agreement of 1944. So before that, all of the currencies were pegged to gold, but then after that, the gold standard was removed, so all the currencies became free floating. So this is the era that we are now in, and this is where our business actually now hinges. So, to become the ultimate trader, you need to know three things which you'll get from this video. The first thing is how successful traders think. The mindset. This is the most important element of anything that you're ever going to do. The mindset. You have to continuously renew your mind, continuously elevate your mind. The second thing is how to read a chart. The chart is its own language, but you have to be able to interpret this type of language. So we're going to talk about how to read a chart, and then we're going to talk about how to execute a simple strategy that will make you consistent profits. So these are the three things that you're going to get from this video. So the first thing, how successful traders think. So trading is about waiting for the right setups, then executing the trade when it appears on your chart. So trading is not just about trading, it's about waiting for the right setups and then executing when it appears on your chart. Just like a hunter who is in the bush until the lion or until the rabbit shows up, whatever the person is hunting. So you are just like that. So this hunt, or a lion that is hunting a deer, is not just moving around and trading, but it's about the stalking, it's about the waiting. And the lion is going to choose the perfect prey, and then it'll go for that one. So we're going to also talk about the laws of probabilities. This is how trading is unlike any other business, because you don't need to be right in order for you to be right and to make money over time. This is the law of probabilities. So a trader has this understanding in all of the trading. So we're going to go through the law of probabilities again. So the second thing is how to read a chart. You have to be able to read a chart, and charts are made up of candlesticks. So these candlesticks tell you a certain narrative about the chart. So the candlesticks speak the language of the chart. Some people use candlesticks, some people use bar charts, some people use point and figure charts. But candlesticks tell you a lot of information. So price action is governed by support and resistance. So this is the second element of a chart: support and resistance. And these are the layers or the places where price is most likely to bounce. So candlesticks are important because they tell you what the investor psychology is like. They tell you what the investors are thinking, what the trades are looking like. They tell you the second most important thing, which is support and resistance. This is where we actually make profit. These are profit points. And then it tells you the third thing, which is cash flow fundamentals. So the cash flow fundamentals are telling you about the trades, are telling you about the sentiment and the attitude that is prevailing in the current market. So a trading chart will look something like this. So this is pretty crazy. There's so many lines up and down, and here you see that the candlesticks are the green ones going up, the red ones coming down. These are the candlesticks, and they're communicating a lot of information that can be grasped and translated by the ultimate trader. So you have to be able to see what the candlesticks are saying on every chart. The Lannister, the Lannister. So we have developed this trade called the Lannister trade. This is the trade that will pay all your debts, just like the Lannister. We're very happy to be sharing it with the world here at FSI Capital. And we just want you to be enriched by this knowledge. So for this very simple and easy trade that could easily make you $5,000 a day, because it's so simple, so effortless. You need a support and resistance zone. These are the profit points. The stochastic oscillator and the candle rejection. So before we go to the charts, we have to know what will happen on a chart. So one of three things will happen at a support and resistance zone. So we have the bronze line, which represents the resistance, and one of three things will happen at this zone. So price will either bounce and reverse, it will consolidate or break out. If it does, however, consolidate, it will eventually go up or down. So the same thing happens inversely, that when we have a support or resistance zone, the price will come to this level, and it will do one of three things. But in fact, it's one of two things. It's either going to go up or down. So when this happens, you have to be in a position to protect yourself and to protect your account, to protect your trade, and to manage your money wisely. All right. So we're talking about indicators, and want to get into the truth about them. Indicators don't determine your success, they don't determine your failure. Indicators aren't predictive, they're conformative. So some people believe that you should never use indicators, some people use indicators, but indicators themselves do not determine whether or not your trades will be successful or unsuccessful. Indicators show you momentum, volume, and volatility, and not all indicators are helpful. Most of them are actually derived from the moving average, which is the moving average price. So for this trade, we're going to be focusing on the stochastic oscillator largely because it shows us something. So when you use indicators, what you're using is you're using something that indicates a certain thing. You're not using something that dictates something. So we do not base trades on indicators. We base trades on price action. This is very important for you to understand. This is why the first thing is to understand are the candlesticks. So a stochastic oscillator is a momentum indicator that uses support and resistance levels of a current price in relation to its price range over a period of time. It shows the likely turning points within a certain price range. So this is the stochastic oscillator. So one thing that we also need to understand about the market is that it operates in an atmosphere of uncertainty. So everything that happens is happening at a hyper speed because the players in the globe are forever changing, but their actions is forever remaining the same. So what could happen today is something that happened before in the past, as shown by a chart. So when you look back in the past, you're gonna see actions done that mirror today, but were done by a whole different group of people who created the same type of atmosphere in a certain market. So the same thing keeps on recurring, and this is what we do when we're now trading based on price action. So the people in the market are causing the price action. All right. So how to do the Lannister? So the first thing, you can pick a currency. If you want to trade currencies, you can pick a stock, whatever stock you want, a commodity, a crypto. This works in all market conditions for all asset classes. The second thing, you find a major support and resistance zone. Okay, and then you have to be patient, and then you go to a high time frame, a 4 hour or a daily. So this trade works best on the 4 hour or daily chart. So if you want maximum results, you go to the highest time frame that you're able to actually endure, and apply the stochastic oscillator, and then enter a trade at a rejection candle. This is the entire trade. So always put a stop loss for all of your trades. This is very important. Always put a stop loss. The other thing is, you have to be patient with your trades. So, of all of these instructions, the patience part, being patient, this seems to be the toughest part to master, because we're first of all looking at a higher time frame. Second of all, some people who start trading have so much pressure of wanting to make money immediately that they're not able to be patient with their initial trades. But you must harness that will to wait and that passion for trading if you want to expand your account in a very short time, because the more you're able to wait is the more you're able to cultivate the ability to perceive what the market does while you wait for what is a setup, because trading is about waiting, so you have to be patient. This is the most important thing if you want to master this. So also, you have to put a stop loss for all of your trades. Okay, so the thing is, we have to find a major support and resistance zone. So we have to go in a higher time frame, and by a higher time frame, we could go up to the monthly. But the weekly time frame is the best time frame for finding support and resistance zones. So fear not the man who practices 10,000 kicks once. Rather, fear he who practices one kick 10,000 times, by Bruce Lee. And if you want to master the Lannister, you have to be as much like this as possible in terms of temperament and in terms of reserve. So, if you're able to control yourself to the extent of mastering a certain trade, then everything that you be doing will be easy as time flows. So, the kick that we want to master looks like this. This is the kick that we're talking about. So to understand the Lannister, we have to understand that what we're looking for is a rejection candle at a major support and resistance zone on a higher time frame that lines up with the stochastic oscillator for confirmation purposes. So this pin bar is the kick that we want to master, because when we see a pin bar, we see that price came up to this point, but then it stopped at this point and it was thoroughly rejected. So this means that this is the tail, so the head is somewhere here. So it's still going down until we see a reversal. So what we're looking for is a support zone or a resistance zone and something like this to happen. This is exactly what we're looking for. We'll be looking for an up move in such a scenario. So a little bit more about probabilities before we carry on. So this is what it's going to look like. Probabilities are the backbone of this trading business. You have to understand the probabilities that are associated with the trades that you're going to make. So if you have an account balance of $1,000 and then you placed six trades which all lost, okay, your initial six trades lost, six trades in a row, I want you to just think to yourself what would go through your mind at that point if you just lost $600 in a row. Do you still feel confident about trading? Do you still feel like you have a winning strategy? Do you still feel like you're able to make the money that you anticipated you make? So So this is what happens at a certain point like this, where certain traders lose a certain amount of their trades, and then they're demoralized to the extent that they start to look for a new strategy. They quit trading, they find employment or something like that. But what happens is, in the next four trades that came along, all of them all of them came to be in profit with a risk reward ratio of 1:3. So the first thing, as a trader, to to you're looking to the laws of probabilities, in the sense that you know that what will happen in a certain time period will revert to the average result of that being done at random. So, in the sense that if you roll the dice an infinite number of times, you're gonna average all of the numbers on the dice, because it is just the same probability that is playing itself out. So probabilities are what you need to understand in terms of percentage, so that you know the winning ratio of the strategy that you have. So in order for you to know the probabilities, you will first test out certain trades so that you see what the outcome of those trades is, and then you'll be able to know the probabilities associated with that particular strategy. So the risk reward ratio is when you are expecting a certain return from a certain investment. So here, when you risk $100, you're expecting a reward of $300. So you already have an anticipated result before you enter into a position, based on the laws of probabilities, so that you know that if you have an account balance that has $1,000, then you're not supposed to take a risk that is beyond half of your account, because of the laws of probabilities. Because even if you're correct, it doesn't mean you're correct at that exact moment. You could be correct about a season, and then you know that it's a rainy season, but you might not be correct about the exact hour that it's going to rain, the exact day it's going to rain. So this is what happens, and this is what you need to understand, because trading is unlike any other business in the world. This is how people are able to make $1 million in a day, $1 billion in a day, because this business is so different from any other business in the world. So you have to understand this fundamental aspect and think in terms of risk reward ratio, think in terms of probabilities. And then you see that even if you only got three trades correct out of 10 trades, you'd still be in a profit, a 30% profit. So when you go to school, if you get three answers correct out of 10 possible answers, it means that you've done terrible. But in trading, it means that you're actually at a profit. The largest hedge funds in the world actually average about 20 to 25% return per year. So this is just like less than 30%, less than three of their trades are actually fruitful in parallel to this. So this is what will happen when you're trading. Your win rate does not need to be high, but what you need to understand is the risk reward ratio, so that you can overcome the losses that you may incur when you put your stop loss. Okay, so the Lannister trade. Now we're gonna get straight into the charts and get into the meat and bones of the Lannister trade. So let's get right to it. So we have this chart. We're looking at the the Aussie dollar daily chart from the 11th of December 2017 to the 7th of June 2018. So what we have is we have the stochastic oscillator here at the bottom, and we have our charts. And so all of these are daily candles that are represented with each candlestick. So what we're looking for is, first of all, to go to a higher time frame. So we're already at a daily chart, and we've already identified a resistance area here. And at this resistance area, we've identified a rejection candle that is over here. And then we've also seen that the stochastic is overbought. So this is just our confirmation. So at this moment, we will enter our trade either here when it breaks out of this zone where we have put this line over here. And then you could short it, and you know exactly when to get out of the trade when this is oversold, and we have hit an area of support. And then we also have this doji candle that is popping up on the chart. So you will basically be able to see all of the oscillations. So this is called a stochastic oscillator because it oscillates. So you have all of these opportunities. You have six opportunities within this time frame, and each day you're making pips because you know exactly the direction that the trend is going. If you're in a downtrend, then you're looking for trades that are going down. So this is exactly what we're looking for, some spectacular trades. So let's go to the gold 4 hour chart. So we're in this month where we have seen that price has hit resistance, and it it hit resistance, and then here it has this star shaped doji, then it has a hammer, and then it now starts to pound coming down until it reaches another level of support. At this support, this stochastic is oversold, and then we see another doji, and then we see another hammer later on, but it keeps on going up until these tails are showing us that the trend is facing the other direction. And this is confirmed by the stochastic and the level at which the market will be responding in the downward direction. So it's very important that you first find the areas of support and resistance and you act upon them. So so here we have another example on a smaller time frame. So now we're looking at the euro dollar 1 hour chart, and we can see that the price is actually moving up in terms of the stochastic oscillator and the rejection candles based on support and resistance levels. So it's pretty awesome when you actually see that there are so many opportunities that you can take advantage of when you know this particular trade. When you know this trade, these are all trades that you could be taking. This one particularly would be a great one because you see this trend line bounce, and then you see this doji, then it shoots up, and then you can hold it as a 1.3 risk reward ratio, or another money management technique. So here, if you are more cautious and you want more refined trades, you can also add this tool. It's called an RSI. So this is a relative strength indicator. So it works basically pretty much as an oscillator. So it shows you overbought and oversold levels. So you can use this for extra confluence to show you when both the stochastic and the RSI are showing the same extremities or the same dips. And then you could use these levels as areas that are more refined to take the trade with a higher probability, such as this one here. They're both aligned, and then you see these tweezer tops. Then you see these ones. This is a dip, so you could still. All of these are supreme opportunities that you could use in confluence with those. So let's look at a gold weekly chart. So I tend to favor the weekly charts because they have the most pips and they have the clearest signals. When you catch one of these trades, you catch it for months, you catch it for weeks, or even years. So you can find that this opportunity would have been a great opportunity at this doji had you caught it, and then you could have just ridden it all the way up and just be increasing your positions on smaller time frames according to the same trade. So the same thing happened. You could see a pattern formation that exploded into another move. But had you been trading the Lannister trade, you'd have already been in this trade based on this doji and all of this action going on here, this engulfing candle. So you'd already been in the trade way before all of this explosion happened. So you could have taken two trades at the same time. So you see, at the weekly level, you have more refined trades. You have just a couple of trades in a year. So you'll be able to take these trades or follow the movement of a certain trend until it ends. So the same thing will happen here. When you see this, you know that this RSI, this stochastic, and this level, at this level, you see, this is a very major level. So this is what we are actually on about. And yeah, you just keep an eye on these dojis, even at all of these levels. So the gold 1 hour chart, even looking at a smaller time frame, you still see the same aspects here on the chart, and this is still recurring. So this is the Lannister trade, and how you take it is you just take it with the rejection zone. So this works in all of the market environments, and when you're taking this, it means that you're looking at the areas of the trends, support and resistance, and such. So it works in all market conditions, as you can see, and in in everything. Like, you'd be able to make some handsome profits if you do follow the rules. Because here, for example, let's just look at this point. We'd follow this pair from the first time it bounced, and look at the 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 recurring patterns at a certain level. So we'll be looking for all of these candles and executing the trades as according to that. So we also have areas that show some divergence. So this is a divergent. These are all divergencies where price is moving down, but then the stochastic is moving up. Price is moving up, the stochastic is moving down. So this is a prelude to another move. So these are divergencies. So all of these opportunities are offered in the Lannister trade, and this is how you actually get into the zone. So this is why I am showing you so many different market environments, so that you see that it works in different market environments, in ranging markets and trending markets and channels, within patterns, on daily charts, on hourly charts. This is just recurring, and there's so many ways that you can actually execute this. For example, this would have been an entire month where you know exactly where the market is turning, exactly where it's hit a top, exactly where it's retracing, and you know exactly what is happening throughout the whole week, throughout the whole month. And then you have 10 trades that you could have made in succession, and with profits based on this one trade, knowing the candlesticks. So I want us to look at different market conditions and market environments. You might have been trading in a recession. So how would this have worked out? So we'll look at the housing market crash of 2007, 2009. And with the Lannister trade, if we had been trading at that moment, then would see that this doji coming at this level would have been an alarm to tell us that perhaps there's something that's about to happen. So we'd look at all of the fundamental data. So you would have an incredible edge had you been trading the housing market. These are the US 500 companies. 500 of those companies, you could have traded any of them. So here we have the S&P 500. So we see this magnificent double top, and then we have this in 2007. and then this is when the market just collapsed until it hit a bottom, and then we are at oversold levels and would know exactly when to get out. This is what happened to the dollar when the market crashed. We see a doji here, and then we see that we're at a level that is very important to the market. And then we see that we have this oversold level, and then the dollar tanked, and then it got some strength. Then it closed here at the end of the market. So all of these opportunities are afforded by the Lannister in terms of all market environments. So this is just the housing crash and the incredible edge that anyone would have had, and it would have given them such foresight with what happened in when the market crashed and there was a recession. So this would be something that would be of great insight. So here we come to the quote again, that fear not the man who practices 10,000 kicks once, rather fear one who practices one kick 10,000 times. So what we have just given you is the most incredible trade, and I've gone through so many charts with you, so many market environments with you, so that you could actually understand the trade through and through. And I hope I didn't overcomplicate anything. I hope that you can actually get to grasp it, to understand it, and that you practice this one kick. This could be your ticket out of your financial situation. And I really do believe that what we really want to do, what I really want to do is to help everybody to get out of a bad financial situation and to be able to elevate themselves. So this is the trade. Very simple, very concise. If you have to, just watch the trade over and over again, and just make sure that you get more of the information in you. Trading is just like any other skill. If you want to be if you want to be good at it, then you just have to keep on practicing it. But fear not the man who practices 10,000 kicks once. So if you have this one kick and you practice it 10,000 times, then you will see that from one thing you know so many other things. If you enjoy this, we have other material, and uh, you have to just be consuming more information about trading and understanding more about this business that you're getting into. I invite you to listen to this ebook and get all of the information that you need. It's going to be an awesome journey, and just know that your trading journey is going to take you far, and it's gonna elevate you. So from FSI Capital, I want to thank you for taking the time to get into this.